Starbucks down 15 after missing on revenue.
$9.2 billion for the quarter versus estimates of $9.3 billion. Record revenues, though, up 12% year on year. EPS a beat here, adjusted $1 versus estimates of 95 cents for Q3. Comps up 10% globally. That is a miss versus the 11% estimated by analysts, up 24%. International also a slight miss versus analyst estimates of 24.2% growth. Up 7% in the United States. That is also a miss versus the up 8.4% analysts were expecting. The company says it's seeing a 6% increase in average ticket in the U.S., 1% increase in average transaction in the U.S. On to China, a key market for Starbucks. Same-store sales climbing 46% year on year in the quarter, driven by a 48% increase in transactions, but a 1% decrease in average ticket. Also, the company adding here 31 million Starbucks Rewards members in the quarter. That's up 15% year on year. Again, the total number of rewards members, is 31 million. Right now, guys, as you can see, the stock is lower, just under 1%. Conference call at 5. We'll bring you any updates as we get them. Back over to you.
All right, Kate Rogers, thank you. Let's bring Mike Santoli into the conversation. Mike, want to get your thoughts, whether it's Starbucks, where North America was a key focus. Yes, we have a China recovery or reopening afoot, but analysts weren't putting quite as much stock into that as they were into resilience of the consumer here.
For sure, Morgan. I mean, I think it's, first of all, the backdrop is a pretty ungenerous earnings season in terms of stock reactions, even when the companies beat. And that's why I do think Starbucks, even though the stock hasn't performed well this year, is backing off on the comp miss. So you don't want to see the sort of loss of momentum relative to expectations there. Not necessarily a big story changer, but, the stock's at about its average valuation over the long term. So it doesn't seem as if necessarily you'd built in that cushion for that slight comp miss. We'll see how it goes from here in the commentary, though. Electronic Arts, similarly, without raising guidance, having beat slightly, seems like, at least on reflex, it's going to be a slight miss. So I think that right now we're in a market where most of the stocks have run pretty well, and you really want to see a clear trajectory toward earnings growth in 2024, into 2024, to start rewarding the stocks better.
Looks like the consumer is slowing and recession may be coming. Comment below what you think.